The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Peter and Steve. Paddy said he would join, but then we held it up 5 minutes late. He hasn't joined. So annoying. It's the new year, guys. We haven't spoken since last year.
Oh yeah, amazing.
That's crazy, that isn't it?
Yes, my boys are sort of getting into that sort of thing. You know, we're actually at Centre Parks for the new year, and Monty said, "Dad, I haven't spoken for a year." I said, "No, it's not a year. No. We spoke yesterday. We haven't spoken for a year." I said, "No, we haven't spoken since last year, Monty. That's how you say it, not a year. We have, and unfortunately, we have spoken yesterday. So it'd be nice to have a break for a year, but yeah." Cool. So, anything exciting happening, boys? Any New Year's resolutions?
Nothing really. No, nothing exciting is happening, and I don't really do the resolution thing.
Yeah. Steve just said he's doing veganuary, and when we said what is that, he just it's just telling people I'm doing it. You know, so not actually doing it. And we could go into one of those pubs with my mates eating loads of meat, just all meat, and a bit of carbs. And,
I realised it's actually quite easy not to eat meat. That's the easy part. It's the milk and the dairy's hard.
Do you know what? No, I find it now the other way around. I mean, no, to be honest, there's so many options these days where you can go out and buy, some fake meat, which is fine, and it's a good replacement. But no, I genuinely hate dairy, milk. I mean, I love on my cereal? Coconut milk. Oh, yeah. And the coconuts don't mind. They don't.
It's not that side of it, because I'm already oat milk anyway. It's the fact that there's like milk powder or dairy in traces of it in products that aren't necessarily.
Steve's getting serious now, isn't he? Hey, a couple of years back, boys, I was on about this, and you just said, "Shut up! I'm going to eat a cow live in front of you just to show how good meat is."
I'm still that person. That's fine.
Don't get me wrong. I'm quite looking forward to going back to meat in February. The reason I'm doing it is to expand my meal horizons.
Hang on, Paddy joined. Paddy's joined.
Paddy.
You gone vegan, Steve?
Is he?
Only for a month.
Well, he's doing veganuary.
Paddy joined on meal horizons.
Yeah. I know. I was asking my New Year's resolutions, Pad, and maybe yours should be a bit more, accountable and punctual on the podcast. Because your name's above the door, but you're not coming in very often. So, but have you got any New Year's resolutions, Pad?
No.
Good. I had a guy, people text in to Wake Up to Money, I listen to Wake Up to Money, right? And people who text in there are pompous idiots generally. They try to go, but I'm doing this and all. And they really, if I just ask people for their opinions, just gets other people stoked up, And this boy just texted in about New Year's resolutions. He said, "My New Year's resolution is not to make any New Year's resolutions, and I'm hammering it at the moment." I thought, well, no, you're not, do you? Because you've made one. Not to make one, you fool. And people texting on that, trying to be clever all the time, And you don't want that at 5 in the morning, do you? You just shut up, you idiot. Why do people text into shows at 5 in the morning? You think there's obviously something wrong with them, isn't it? Just get on with it.
Would you say you're in a constant state of annoyance?
No. I think I'm getting better with that. Even on Twitter before, I used to argue with people. Now I don't bother.
Yeah.
I don't even bother getting involved. Because the thing is, that's what Twitter wants. They want, that's why they reward extremism, because they want engagement. All their metrics about engagement, people on their platform arguing. So what you want to do is put something out there, right, that's a little bit controversial, then other people argue about it, but don't get involved in the argument yourself. You start the argument, let other people, and so people who have big followers just start arguments among their followers,
Well, congratulations, Just. That's taken you 51 years to realise that, so, and we've had to put up with
hang on, Twitter, Twitter has been up for 20 years. No, but what I say is, they reward extremism, don't they? If you put a moderate, sensible post on Twitter, and people say, "No, that's quite well thought through. Actually, it's good," you won't get much reaction. If you say,
depends what your reasoning is for being on Twitter, though. Like most people, I think most people aren't there to cause a reaction.
Yeah, but most people, surely, hang on, most people want to get more followers, don't they? Isn't that the thing?
Well, I don't know.
Really?
That's not.
Is there anyone saying? I don't want any more followers, and we got 5? That's plenty. That is plenty.
I don't really care how many people follow me. That's not the motivation for being there.
It's different. But I don't particularly care. But what I'm saying is, I post stuff that is not extreme, But you find extreme stuff tends to get more reaction, more likes and all that stuff. But what I'm saying is, social media is a little bit evil like that because it rewards extremism. That's not the way forward. And life isn't like that, you know? So online is quite extreme, but life isn't like that. Generally, people tend to compromise.
It kind of is, really. In a conversation, you're out, you know, if you said something and then nobody reacted to it, you'd be a bit disappointed, wouldn't you? Like constantly saying things and then me...
Well, that means you're boring. You know, if you're sitting there saying, well, it's, the weather's quite mild, isn't it? No, it's not. How dare you say the weather's mild? You know, but
I'm going to talk about veganuary.
Yes, I think we should eat vegans. What do you think? And if you put that on there, we should eat vegans. That's it. They don't mind. So that, you know, that kind of thing gets a good reaction. But anyway, New Year's resolution, waste of time. Like I said, the boys at Centre Park, Monty didn't get it. I haven't spoken to you in a year, Dad. And I said, no, it's not in a year, Monty. Last year you haven't spoken to me since. Yes, same thing. No, it's not. I went to Dominican for holidays. We nearly drowned. First day. Nearly actually drowned. First day. It was really scary. Yeah, no, it was really scary. We went to there's a lovely beach, a cove, but part of it was quite choppy and it undercurrent. And so me and the boys went in there, and it wasn't too deep, and the waves are good, and we got dragged across. We got suddenly dragged out, and Fred was further out, and Monty was out. So I was trying to push Monty in. I was literally got the point where I was losing breath. I was breathing heavily. The waves come over my head. I was holding Monty up, trying to push him in. Meg, she was panicking. She sort of ran in and ran back out because she was scared. So thanks for that, Meg. Thanks for the help. And then all of a sudden, 2 lifeguards actually came in. One with a surfboard and one with those red things they have on Baywatch, you know. And I pushed Monty to go on the surfboard. Then a helicopter went over. I thought, is that for us? And so we started panicking. And I got out. Genuinely, I thought we would have got out. I think we would have got out, But it was that thing, it was undercurrent. And you mustn't try to swim for the beach. You must swim across, you know, and try and get out of it. But we don't get that. You panic and waves come over. And I genuinely was breathing so hard. And I thought, no, I think we would have got out. It was more scary because there were 2 guys coming in and rescue us. And then in the evening, I just had a genuine panic attack. I may have died there. First day on holiday, we nearly died.
Wow.
Well, the second thought was we paid a bit of money for that holiday. You can't die on day one. At least get your money's worth dead, die on the last day.
Yeah,
it's a beautiful place to die.
Yeah, it is.
But can I just say, this is why we asked for your password to your stock portfolio.
I know, but you thought I was going to die on the plane. I did. He drowned on a lovely paradise beach. I know. But
I was quite open to suggestions. I wasn't just sticking to the plane, so that's fine.
Yeah. Just,
however you go, as long as you've got your password.
Yeah, that's all you're concerned about. They may die, and the boys kept saying, listen, put your just send us your password to your stockbroking account, and we'll get that bit sorted.
And then go for a swim, Dad. Yeah, swim out there. It looks beautiful.
Really go with the sharks and all that stuff. Yeah, go with it. And but you know what? I find holidays really boring. Really boring.
Okay.
Oh God.
Megan and the kids love them, right? I just find them so boring. I read 3 John Grisham books. And they're not small books, John Grisham. 3 in a row, right? In 10 days. I was on the 4th book on the plane the way home. And I think you can only do so much. I love reading.
Fun to be with.
Yeah. I really love reading, but it's like you can only do you know what you realise? You sit on this beach, and I took a picture, and it's a paradise beach. There's not a cloud in the sky. The sand is basically white, and the sea blue, perfect, postcard. And I'm there thinking, this is so boring. Just sitting there, any cocktail you want, the guys that serve you, come to your sun lounge and serve you. We're on the beach part. There's a pool, lots of pools and a beach. There was no one around us. And I always try to like to get a spot away from other people. So I hate people generally. So we're sitting there with any cocktail of your choice in the best weather, reading a book. And I'm thinking, this is so boring. Really,
I want to be in my sticky garage. On my
exactly. I'd very my sticky little office.
CEOs.
Yeah, just doing stocks. You realise,
shouting at people on Twitter.
So what I'm saying is, when people send those pictures, and I sent a couple to say I'm having a great time. But
I think those people do have a lovely time, though, Just. I think it's just you.
Yeah, I got to the stage now. I don't know if it's my age or what, but even overeating and over drinking is hurting my stomach. It's like I've got chest burns, acidic burns. Just found uncomfortable the amount of food I was eating.
I think it's your time to go, Just.
Yeah.
Give us your password.
Why didn't you?
It's amazing you lasted this long.
I know. Why didn't you go? One of you guys can go with a family, I think.
I was just about to say, you should think. Do you ever spare a thought for all those people who can't even afford a holiday?
No, they can go on it. They can go on
right.
it. You know what?
Why don't you give your place to one of those? Because they would absolutely love it.
Yeah, Megan and the kids love it. Every year we go on holidays, I'm going to have an argument by day 3, saying, I can't stand this. It's absolutely insane. Just overeating, doing nothing.
Well, you don't have to overeat. That's your
You
own...
do have to overeat. They got
that's
buffet
your
full
own
of
lack of willpower.
They got buffets and restaurants full of good food, and you think, but I just think the waste of it all. You know, I just think so much waste.
You should listen back to this and listen to what you're saying, because it's a bit like, come on.
I know that, but I'm not saying I'm spoiled.
Woe is me. Anyway.
I'm spoiled. I'm not saying that. All I'm saying is,
spoiled.
I would prefer to literally. Paddy said, I think I would prefer to sit at home and look at stocks and shares. That's what I like.
So why don't you do that? Because I'm sure Megan would love to go on holiday with me, Pete or Paddy.
Yeah, all 3 of us.
Yeah, she probably would. Yeah, she probably would. And yeah, I know. It's been, I know, it's a first world problem, but it's just about. What I'm trying to get at is the message is. The grass isn't always greener. You know, people always imagine, let's move abroad and have a nice
What colour's the grass there?
And live in a villa, you know, and the sun and all that stuff. And it's just not. Sometimes, you know, be thankful for what you have, you know, because and I am. But living
Stop moaning them.
Living the so-called paradise life, you know, and all these Instagram pictures you see, it isn't the truth. It isn't the truth, you know.
No.
Stop going to the Dominican Republic then.
No, it's lovely there. It's lovely. It's
right. Okay.
And the people.
You may as well just hand over all your earnings from the shares to people who actually want it.
Yeah. No, but listen. I was talking to a guy called Tim there, right? Tim was a Canadian. Tim was about 25 stone, right? His kids were big.
Tim was at the buffet.
He had 3.
Yeah.
Listen, he sat. He didn't go in the pool. He sat on a it's like basically like a park bench kind of thing next to the taco truck, which is next to the water park, right? He had 3 kids. His kids would have like 2 burgers for lunch, and they'd get up at 1 p.m. He was into real estate. He owned about 100 properties, right? And he just sit there. And he'd broken his leg. I don't know what happened. He had a little trolley for his leg, so a little sort of you know these shopping trolleys you get, but it was almost like a little bike, but had a little cushion for his knees. So he used to bend his knee, put it on the bike. He was massive, and he used to push around. And he used to sit at this park bench, and the shopping basket was full of an ice bucket all day, right? So he had cans of beer in there, and the guys that would serve him, once he took a can out, there was a spare place, they'd put another one in there, and he'd tip them all day long. That's all he'd do. That's all he would do. He was 25 stone, you know.
What a life!
And I thought, the guys serving him seemed happy in him. I don't know why, they just seemed happy in him, you know.
Well,
and
he's tipping them.
Yeah, exactly. And I remember once his daughter, who was about 10 or 11, and Megan said to her, "What are you doing for food this evening?" All you talk about is what you're doing for food, or what are you doing for that? It's boring. Anyway, and she said, "Oh, we're going on a romantic." Because he didn't have a wife. He was separated from his wife, and he was there just with his 3 kids. And he said, she said, we're going for a romantic meal by the pool because it is romantic tables, uplit. And we saw the next day, and we saw Tim. So did you go for the romantic meal with your kids last night? He said, oh, no, I didn't. I got, trouble is I got overserved at the bar yesterday, and I didn't make it through to the afternoon. I said, you got what? You got overserved?
That's a great phrase.
That's an excellent phrase. I said, you have to consume it, Tim. They're not forcing it down your face. He said, I know, you're smiling. But that's an excellent North American singer. The trouble is I got overserved last. You got drunk.
I love it.
You got drunk.
Poor kids are probably looking for a lovely meal. That night. They're like, and Dad was wasted in bed.
No, do you know what? They're probably on their iPads all day. Literally, the kids didn't get to 1 p.m. Our kids wanted to play in the water park with them. They didn't get to 1 p.m. But a couple of Canadians, and Canadians I thought were more conservative than Americans. But the 2 Canadians I talked to straight away, they talked about real estate and money. And this guy said, I got a farm down the road that I own, so this amount of money, my farm must be worth this much. Tim was telling me how much he turned over. I thought, guys, they didn't ask me once what I did, or one of them asked once what I did, didn't ask me about money.
You told them though, didn't you?
No, I didn't say anything. It's amazing you talk to people.
Once was enough.
They tell... No, I do ask questions about people. I always want to know what people do for a living, you know? But they didn't ask me at all what I did. They talked about themselves constantly, you know? That's a bit... It says a lot, doesn't it?
American way of...
Yeah. And so one of them asked basically what I did, weren't curious. I think one of them just returned the question out of politeness, because I asked them, you know, a lot. So,
that's usually they don't want to speak to you.
Yeah.
They're probably struggling to understand you, to be fair.
They're probably sat on a real estate podcast right now. We met this guy. I don't know what
the Irish guy we met.
I couldn't understand a word he said, but he did some kind of PR stuff. I don't know what he did. Fascinating. Tim was massive, lovely guy, massive though, absolutely huge, and didn't stop. He could put away, I'd say, 15, 20 beers of an afternoon quite easily, you know. And
that's what happens when you get overserved.
Yeah. That's the one negative review on the website. They overserve you. That's the trouble. You know?
It's literally like the fat people out of Wall-E, isn't it? You seen that film?
Yeah.
Where they go around on the little trolleys and they get fed like these really fatty meals, and then they go around to the next meal, and it's just the revolving life of being a fat human in the future.
Was he bigger than you, Just?
He's like 3 times the size of me. Listen.
Is he bigger than you when you were big?
Listen. So this is the Caribbean, right? The Caribbean for Americans is like the Canary Islands for Europeans, but the Caribbean's a lot nicer than Tenerife, and all that stuff. So for them, it's a 4-hour flight. So there's a lot of Americans there, large, nice people, but loud, very loud.
Oh yeah.
Why are they so loud? There's almost a volume switch. Turn it down a bit,
There's a historical thing, isn't there? Between we're quite quiet. We're based on the Protestant way of life. Okay. They like to be a little bit more gregarious.
Yeah. Okay. Anyway, that's my thing. Boys, so 2021, right, on the markets. Do you keep a check on your portfolio? Do you actually look at? Do you tot it up I do mine every quarter.
Oh, I do mine.
I just log it when it gets to a new high. So yeah, that's quite depressing.
Yeah. So do you know how you performed? I don't mean sexually. I mean, stock market wise.
No.
Down, mainly, just down.
Was it though, Pad? Was it down?
Last year?
Yeah.
Yeah.
Because I tell you what
I don't know. I can't remember what it was.
Exactly. Do you know what I did, right? So I totted it up on New Year's Eve. We're in sort of Centre Park. So I totted it up. I got the little spreadsheet out. It's a New Year's Eve spreadsheet. Yes, all right. And I just totted it up and see how I performed. And I was really surprised that my portfolio had gone up in 2021. It'd done 26%, which is an excellent return. And I realised Q1 and Q2 were fantastic. And in fact, the numbers up. But the last 2 quarters were awful, but I focused on that. I focused on that pretty much in my head, because obviously they're the most current and most recent. So Q1, 34% I did. Q2 did 22%. So 62% pretty much in H1. Then Q3 down over 9%. Q4 down 14%. So that's 6 months there. I did down 21%, but overall 26% up. But I didn't feel that. I didn't feel it. But until you write it down, that's why you should record what your portfolio is doing. Because surprisingly, emotionally, I'd wiped out Q1 and Q2. All I felt was Q3 and Q4. And I thought I'd make a loss.
Yeah, that surprises me that you didn't know that you don't track that. I do. I have kind of quite a good idea of where I am for the year. I know I don't. I try a bit longer term and only ever tot them up every quarter, because 3 months is the shortest period I believe you should. Watching share prices on a daily basis affects you emotionally. It's not good for you at all, but it's highly addictive. It's like watching screens. My kids on Instagram or TikTok just infinite scrolling.
I just checked mine and I'm actually down.
Why are you down? Oh, you've got a lot of crap you've holding, Steve.
Down 15%.
Yeah, but you don't. Why are you down? Because all that crap you're holding, you'd never sell quick enough, do you? On the SO4 was one. It's not about the winners, is it? It's about getting rid of the losers. If you get a company that's rubbish and you know they're rubbish, you've got to get out. In fact, I did a discussion about SO4 on the webinar, SharePix Investment live webinar every week, by the way. In fact, reopening memberships soon. It's been closed for months, not allowed to join, but reopening soon. About SO4. I say, how do you know when to get out of a company? And I say, use a red flag system. And if a company says something that hang on, what are you talking about? That's not part of the plan. One red flag. If they get a second red flag, get out as fast as you can. Don't give them a second chance. No point. There's plenty. There's like there's thousands of listed companies you can invest in. Why invest in one that's telling you fibs or not, adhering to the plan? So with SO4, they raised money when they said they didn't need to, and then they did it a second time. Get out there. And then the CFO resigned, which is a big red flag. When the second guy in command of the operations of the money side of the business resigns, that's a big red flag. So that was 3 red flags. And then I think they did another problem with fundraising. Although production lines were pushed out, production time was pushed out. That's 4 red flags. If you're still holding on by that, the share price has crashed anyway. But second red flag, get out as fast as possible. And on the first red flag, be monitoring for a second red flag. Always be careful, because if it doesn't come, fair enough. But
make the decision to hit that sell button as soon as the second red flag comes, because it's not good. And in fact, after the first red flag, you get out really. But so why is that? Why it was down? How are you monitoring that, Steve? On Harry and Larry?
No, I got a spreadsheet. So every of the first of every month, I've got a little thing where I put in my total portfolio, and it does a little sum then to tell my percentage, what I'm up and down.
Oh yeah,
it's annoying that they don't do that in Harry and Larry, isn't it?
Yeah, not accurate.
That'd be a really simple thing just to show your
Well,
they
value
do
over time. Eh?
But the problem is it doesn't factor in the cells, so it gets a bit. That's the problem with their Harry and Larry's interface.
So what's you've got both? Yeah. Barclays got both. You've got analysts, which is good. It tallies up with my spreadsheet as well, so I know it's working. So I do that, and I took screenshots for any presentation to show it's easier. But so just as a comparison. So what did you, Pete? Were you up?
Yeah, I finished up. I mean, I think it's 13% up for the year. The thing is, and that goes back to what you're saying, psychologically, though, I felt it wasn't a great year because I think in about May time, in the first 5 months of the year, I was something like 60% up. So it was like really going well. And then to end only 13% up feels a bit like a loss, but 13% is a pretty good return.
Well, listen now, the FTSE AIM all share, all of AIM only did 3.3% last year.
Yeah.
I mean, the big industries...
So I can work it out now. I was up 10%, so that's...
There we are. So that's, I mean, the big industries, oddly... So I like this. This is quite bullish for us because we hold AIM shares. FTSE 100 did quite well. It up 14%. It's the best year it had since 2016. So that was quite good for FTSE. I mean, the FTSE is international companies, of course, big, massive companies, not domestic. But even the FTSE 250, again, gained 14.6%. So they did well, but that's good. But AIM did 3.3%. That's quite poor. Really poor, So I'm quite bullish. But I mean, again, it's a market of stocks. It's not a stock market. We look at indices, and indices are not accurate. You should be if you want to, like Megan, for example, holds the Vanguard Life Strategy Fund, right?
Yeah,
that did 20% last year. Very passive investing. Why? Because 20% of that fund is US big stocks. They've done very well. Obviously, the big five have done very well, and 20% is FTSE 100, pretty much. So those two indices alone did very well. So, but. That's if you had a cracking year, FTSE, for example, in 2021, it may not have such a good year this year. It doesn't follow, but AIM's had a bad year. So I think, I've said this, I think this AIM is in a bear market. And it pretty much, if you look at it, it's went up and then came back down. A lot of stocks are taking a hammering. And apart from the big five in America, a lot of stocks are not doing well. So I'm quite bullish about 2022. I think it's going to be quite good. As long as you're picking, again, good, improving companies, reasonably valued in hot sectors. That's the thing. In fact, when I say good, improving companies, what do I mean? Growing, improving companies. How do you break that down? Here's a question. If I say growing, what's growing, boys? What is growing?
Revenue.
Expanding size.
Revenue. Who said revenue? Who said revenue? Who said it?
It was Paddy.
Well done, Paddy. It's revenue. So generally, I'm into the micro-cap space, as we know. Small caps, why? Because when they grow quickly. You can do multiples of your money, even though it hasn't seemed like that in the last 6 months at least. But if I look for revenue growth, 20% year on year. I mean, there's been some companies, can forgive them this year because there's been issues with supply chains and all that stuff, so it may have stuttered a bit. But 20% year, that's growing. Improving. What do I mean by that? Improving. How do you measure improvement? Hey, is it like the CEO having a new hairstyle, a new car? That company's improving. He's got a new car. Look at that.
Yeah, exactly.
He's got a Ferrari. He's got a Lambo. Yeah. What do you think? Improving.
Well, improving that can be multiple different things. Operationally improving efficiency.
Yes, efficiency. Where does that show? What does that show through in?
Profit.
Margins.
Yeah, margins.
Look at my margins, eh? Yeah, so if you get growth, which is the top line, improving, growing is the growth, and then improving margins, which is, that's an improving company, then that gets better. It's the bottom line, okay? Growing, improving, if they're reasonably priced as well. It's hard to get growth and value. It's hard to get that put together. Some people go for growth, but the value is crazy, like American stocks, the Rivians of this world and all these companies, these EV companies have no revenue. They're valued at billions, they've got potential growth. That's hope hike potential growth. But do they have the value? No, they don't. So when you have like an interest rate hike, or the Fed minutes come out, the minutes from the Fed meeting, I bet that's a cracking read, the minutes from the Fed. But they suggested they're going to raise interest rates this year and reduce the bond buying program. The big companies that have no revenues, no profits, nothing, but they're valued in multiples, take a big hit. Because, of course, any interest rates go up, the debt they've grown their business on is going to get more expensive. So if you can get growth and value, and you can get it in a hot area as well, then you're doing very well. And I'm quite pleased. The companies I hold, I think are, fit all those metrics. They're growing, they're improving, they're reasonably valued.
HGV.
HGV?
HGV, hot growth value.
Oh, I say, hot growth value. I like that. HGV, yes. I think it's HGV.
Back up the truck.
HGV, what's the hot growth value? Yes.
I thought you were going with an old reference for TV then, Pads.
Yeah, it hasn't got. I know it hasn't got.
HGV.
Hasn't got improvement in it though, is it? Like margins.
HIV. I know.
I invest in HIV stocks. Oh yeah, medical. No, not medical. No, it's my own acronym. So HGIV. No, we have to move around it. But 4 areas there: growth, improvement, value, and hot. Yeah.
The first 3 are better than the last one, aren't they?
Yes.
HGIV.
I think your acronym needs some work. But
Yeah,
okay.
it does. Yeah.
Hot.
Higher. Okay, good.
So do you know what I think 2022 is going to be good for several reasons. Do you want to know why?
No.
Have you written them down?
Okay, I won't talk about it then. Right.
I'll just read down the maths on my. It was actually only 5% last year.
Right.
So
To be fair, boys, you're still beating my minus 16%. So
I mean, it's still beating the bank account, isn't it? But I mean, it's not.
Yeah, but
not that exciting.
Steve, a second. Steve, I know, but listen, that's a good. If you in a bad year, which it has been for microcap UK stocks, honestly, if you have a bad year like that, and you're still even up at that. But even 16%, Steve, small cap stocks, microcap stocks, and can do that in a day.
Yeah.
With the right headwinds there.
Just wish they would, Just
tailwinds, I mean.
Why don't they?
Well, they will. That's something I've never known. It's been liquidity drying up. But I think what's helping as well is I did do a survey saying got a lot of votes. I think is 2022 the year the crypto bubble pops? And I don't know if you've seen recently, we're at 41,000 Bitcoin down from 66,000, and it's in a horrible downtrend, and I can't see it recovering and I think this is the year it pops because it's been insane. It's based on no valuations whatsoever. There's no revenue. There's nothing there. There's all just ideas. It's exactly like the dot-com bubble, exactly like it. People say it's different this time. Are
Hang on, you
deluded.
say it's going to pop, which you mean it's going to go down or up? That's
If
what you said it's going to go up.
If you got a balloon,
God.
you mean popping? I assume you popping the chart in the price. No.
Well, that's the thing, yeah.
What is a bubble that pops? If you got a balloon, Steve, and it pops, where does it go? Down or up?
It's going to go down. Okay, yeah, but when you say pop to me, that's like it's pop. It's going to go.
Yeah,
It's something
pop
pop that goes
could
up.
be
Oh, I know. No,
Right,
the share price
yeah.
pops. Yeah, when you say to my share pricing pops, yeah, that goes up. But when I'm talking
Well,
about
you confused me with the same word there.
Well, you
so-
didn't. You didn't. Wait, hang on. You
If you
didn't.
say it's a balloon, and then I understand it's going down. If
Well,
you
hang
say
on.
it's
Hang
like
on. Did I use the word bubble?
Yeah.
Yep.
yeah, but
Or did
bubble
I
can
use the
pop,
word
and then-
share price?
Yeah, because those are the same. What?
Yeah,
Because
yeah,
if
well,
I said, is 2022 the year the crypto bubble goes pop? See, so that's a bubble.
Yeah, but
a bubble
that's the
pop.
thing. I do agree with Steve because pop and
Oh,
drop.
no, I agree with him, but
Yeah, pop and drop,
word,
exactly.
No, the word. The word. The most important word in that sentence is bubble. No, it's a
all
bubble.
right, okay.
So
how about
that's
we use
what
the
I'm saying.
word down and up?
Yeah.
Yeah, I suppose so. It goes down, but it's going down now. So there's a lot of liquidity being dragged. I mean, because the risk factor of crypto is very similar to the risk factor of AIM stocks. A lot of people just in a Venn diagram. There'd be a lot of overlap in UK traders, investors, but they'd be doing crypto and AIM. But if we see a drawdown in crypto, and I don't see any way it can't come down in value because it's a ridiculous value even now, all of it. Even turkey stocks or meme stocks, whatever they're called, dog stocks.
Yeah.
They're all valued in billions, and they're ridiculous. They've got nothing but an idea,
I had an interesting conversation with a couple of friends over Christmas, and I hadn't realised, but they have invested in crypto, and they obviously know that I
Top of the market.
But they invested 6 months ago or so. So they're doing
Top of the
okay,
market.
doing quite well. But
They're not now, are they?
No, they are, because
you'll find most new investors in the crypto would close to the top of the market when everyone was shouting about it. Crypto is the easy way to make money. There's no easy way to make money, and that's the thing. People will find out.
Okay, we'll go. I can't remember, so I don't follow it. But they're up. So probably more than 6 months ago, maybe a year ago, they started, and they've been going into it. And they was really surprised that I wasn't invested in it. They're like, "But you're into investment, and that's the future, isn't it?" And I'm like, No, but I don't understand the valuation. I don't understand it. I don't get it. I've not gone into it. I'm steering clear of it because I don't, I'm looking at elsewhere at my investments in small cap stocks, and that's where I'm interested. I'm not interested in crypto. But it made me think, that's the shoe shine thing, isn't it? Of like, the shoe shine boy being in, and like, wait, no, but it's crypto. It's the future. Everyone's into it, right? I'm like, no, I'm not into it because I just don't understand it, and I don't understand the valuation. And I now talk through valuation a little bit about, small cap stocks and stuff like that, and kind of go, I get a better understanding of what I'm investing in there, and I'm a bit more comfortable with that. Crypto is like flipping horse racing.
Exactly that. And you're right in the shoe shine analogy. Is when the masses think it's easy to make money in the market somewhere, that's the bubble, that's the pop, that's the top of the bubble. That's when it's going to pop and the needle into the bubble. Because in fact, if you invested a year ago now, Bitcoin's pretty much the same price. Then it dipped down. That's in January. It dipped down to like 30, and then went up to 60, and then came down again to 30. Went up to 60 again, and it's come down. And I think symmetrically, it come back down to 30. And then listen, Tether, it's getting more. And we talked about this last time. Tether is the biggest fraud out there. It's the fourth biggest crypto. It's like phenomenal amount of, it's worth 78 billion. It's supposed to have that in dollars, the equivalent. They won't show it to anyone. Where's your money? They say, well, some of it's not in just, cash. Some of it is now is in debt. They've invested in debt. Like where? In China. Really?
I would say it's in the metaverse.
Yeah, exactly.
Yeah.
But you know what? It's exactly. That's another word for it. It doesn't exist. It's Fugazi. But they've admitted that it's in Chinese property debt, which you think, are you kidding me? That is unfolding
that's a
there's a slow car crash happening right now. And it's huge, massive. Even just one company has 3 billion in debt. So you think that's crazy. So I think once Tether unravels, and a lot of people are saying that there's a big guy on Twitter, he's got the whale basically, and he was pro crypto, but he's turned against it, and fair play, he backs up his arguments. He says, most of the volume is Tether buying Bitcoin, and the guys will not show their accounts to anyone. Even the SEC in America, which is our FCA pretty much, but bigger, saying they want to see their accounts, and they're just dragging their feet and all that. That's a fraud. And once it happens, people say, that was obviously a fraud, looking back on it. But at the time, people don't want to believe it because the share prices are rising, or the prices are rising. They bought into the hype, So
Are people actually using that as a currency, or is it just merely something for foreign exchange? Is it merely just for trades?
Well, no, Tether is like, it's a stable coin. It's supposed to be pegged to the dollar, so people can't transfer dollars easily between exchanges. So they transfer into Tether first. And that was why it was set up as an intermediate. It's always stable. It's always the same as the dollar, apparently. But they're supposed to have, 78 billion. They're supposed to have 78 billion in dollars to back that balance up. They're not showing anyone. Where is it? And in fact, Bloomberg, like I said, did an article. Where's Tether's missing billions? And they don't know where they are. They're not showing anyone. But they did admit some of it's in Chinese debt. Well, that's a good place to be. Like, really? Okay. So it's going to happen. I mean, it takes a long time. These kind of bubbles take a long time to unwind. If you look at that Theranos, that lady Theranos, do you remember we read the book on that? Like, I don't know how many years ago. But look how she's just gone to court. It's like I read that book. I've forgotten when did that book come out? Because I read it years ago. And
it must be about 10 years ago.
Yeah, and she defrauded a lot of rich, clever people who didn't actually do their due diligence on anything. She just said, no, we can't tell you about it. It's top secret. Oh, okay. I'll just give you $1 billion then, yeah?
I'm sure there's loads of those in Silicon Valley as well, though. Just people who had a very good intention, but actually it's just not working out, and they're in too deep. I don't know how to get out of it.
Yeah.
Well, and on AIM as well.
Yeah, probably.
Yeah.
Yeah, but AIM doesn't get. You're talking about the Secretary of State and all that. Some big investors, billionaires invested.
Yeah.
You think? The trouble is, I think at that level, people have so much money they don't have to do due diligence, do they? Bill Gates has invested in hundreds of companies. I'm sure he'd invest in a couple that's going to go pop. He doesn't care though, because a couple of million to him is nothing. So it's fine. Yeah. It's like putting 20 quid in something. So
what I meant about AIM was because I've been following that story, and I thought, it reminds me of a couple of CEOs that we've we've got to know over the years. Some name, talking a good game.
Yeah. So Steve, I just want to dig into that. Where did that loss come from? Have you managed to pinpoint it?
Well, a big part of it was Polarian, if I'm honest. I think that's the key thing. I cleared up my portfolio towards the end of the year anyway, so I have got rid of a lot. Well, I'd say a lot. I've got rid of all those dodgy stocks now, which I've had. And I pushed it into stocks. So I'm pretty happy with my portfolio at the moment, but obviously it's not really performing. But I don't think anything's performing really at the moment, is it? So fingers crossed 2022 is going to be the year it pops up.
But it's not. But listen, one thing is for sure. The stocks I'm in are not in a bubble. They're reasonably valued. I mean, bubbles are where completely you can't. It's odd, isn't it? I mean, you look at people. So if you ask any of those guys there, Pete, some of your mates who said we're in crypto. So if you were just ask them, so how do you value that then? And their answer is, well, it's just the future, isn't it?
Yeah, exactly.
So how do you know what the future is? It's like, what? Yeah. What is the... I mean, because blockchain will be used in the future, but, 2,000 sort of meme stocks will not be used in the future. They will go bust. They're like, exactly the same as .com. So I say, you always got to try and put a valuation on something. Always. I'm new, because that's what... what is it worth? What's it going to be? If you don't know what it's worth, how do you know what it's going to be worth? It doesn't make any sense. So...
the way I look at valuation is that, if you don't think it's valued that, then why are you expecting other people to think it's going to be worth more? And why would you expect them people to invest in it? So if you're looking at a company, you go, that's undervalued. Then you go, well, hopefully then other people will realise that's undervalued and people will pile into that and that will help the share price go up. Yeah. If it's overvalued, you kind of, why are you expecting it to go up? Because other investors will go, well, no, that's overvalued. I'm not getting into that. So the share price won't go up. Looking at it really simplistically, but that's kind of it, isn't it?
But it's the greater fool theory. That one where people
buy hope for idiots, haven't you?
Yeah. Well, people. It's the hope high potential. I talk about this even with microcap stocks. There are two types of stock. There's the hope high potential stock, which rises very quickly based on, it's the future. It's going to be massive. And generally they start sub 20 million market cap at the start, and then they do very well. If you're in a stock that has little revenue, but the valuation is close to 100 million or more, then there's a good chance you've missed out the hope hype, part of the rise. But you're still treating it like a hope hype stock, and sooner or later it'll come lower on, when it has to back it up, that valuation on fundamentals. It'll start to drop, and then there's of course sustainable value, which means it's not as an aggressive curve, but it'll take a while. And that's the stocks I'm pretty invested in now. They're about to achieve profitability. They're growing and all that stuff. Now they're not going to have a massive, crazy 100% in one day, but they will grow slowly and they'll continue to grow over the years. So that's what you want. You want a company that will return you multiples over years rather than just a pop. I mean, if you want to get in, we've had a few of those in the past. Pop and drops.
Up pop or down pop?
Up pop. This is a pop up.
Up. Right.
So there's a hype. There's a pop based on hope hype potential. And there's a lot of these out there, and you can make fantastic money, but you've got to get in at the right time, and then you've got to get out at the right time as well because they pop and drop. So, so you may have one of these in your portfolio if you want to make a quick buck, but don't ever invest in one if its valuation is 100 million market cap or more, because the pop's happened. And
which are the ones we should invest in for a quick buck?
Do you know what? In fact, I'm going to talk my own book here, but no. In fact, what I was going to say before we get into that, right? So. I think the reason why I think it's going to be a good year is this: inflation will peak. They're saying that. They're saying around April now we'll see peak inflation. So we'll have transparency on interest rates, because interest rates obviously they put them up to the scale. But we are in an odd situation where supply chains and everything has pushed prices up. People can't get things. High demand, supply can't meet that demand. Supply will get better as time goes on, so that will bring the price down. There'll be more competition, all that stuff. And I think Omicron will be gone. Omicron, it's a cold, ladies and gentlemen.
Well, as long as then another, whatever the next one will call.
The next one isn't as,
I mean, the scary thing is, I talk about buying into fear. The market gives you opportunity when there's fear around. But a lot of people, and it doesn't matter what you say, and people say, yes, but what about this? What about a new variant? What about this? That's part of the fear you need to buy into. So when people say, there's more of it, and the mainstream media at the moment, it's all about the NHS, of course, and they're under pressure, and there is under pressure, of course it is. And there's loads of cases happening, loads of this, and so it's a load of fear at the moment. But we know this lasts for a month. By January, we've gone past the peak of Omicron. Once we see, it's how we're already happening in London, isn't it, in parts of London? But once we see that, that coming down, that figure, that's it. It'll start rallying. The market will start rallying very quickly because we realise it's probably one of the last big waves we'll have. I mean, there's lots of people said to me on the webinar, someone said, yeah, but there's a new variant out.
and there's this one from France. So no, that variant was discovered in November. It's not a variant of concern. There's plenty of variants coming out all the time, but they only flag up.
I don't think we can ever say there's not going to be another one, though, is it? Like, I mean,
there will be variants of concern, yes, but we're now, because we just, as we know by facts, because we have more immunity, through either infection or vaccinations, then it won't affect us as much. It won't kill us as much.
Haven't they said because of the spreadability of Omicron? Transmissibility it's probably not gonna. It's gonna wipe out all the other variants, and actually nothing else is really going to come to things. So there's a
lot of that talk, isn't there? So that's how Spanish flu happened. Basically, we've got immunity levels rising on 2 levels because of infections. Previous, people been infected, so they got T cells and all that stuff, and also vaccinations. So it's not going to hit us as hard as it was, when the previous. So that's going to happen, yeah. So I think now it's probably a lot. Even Boris said it's the last lockdown we're going to have probably, and but that fear what I'm talking about is what you buy into. I don't think we've had a time when we realise this is only going to be around. This kind of fear is going to be ending the next week or so.
There is, unfortunately for us, like stuff with Escape Hunt, especially. Like, there's no founded fear anyway. Like, that's a company that's ideally set up for this environment, and yet it still fell off a cliff.
Yeah.
So it's almost like it doesn't matter.
Do you not think of Escape? Do you not think of Escape Hunt when we start seeing half-year figures, full-year figures over the next year? People are going to start going, okay, right, here we go. Especially with Blue Battle Bar on board as well.
Yeah. That's what I'm saying. That's what I'm saying. Based on fundamentals, that means financials, and that's exactly what you should base most of your portfolio on good fundamental increases, because you can't take that away from them. If they've had, even if they've, I'm assuming it wouldn't have been as busy. It's not been as busy as it would have been if Omicron wasn't here, because people just all this fear is meant to change your behaviour a little bit, and it does. People tend to say, oh, in fact, should we now maybe not do that? And we've seen bookings have gone down for many areas. But they've also got that support. Like I said, was it $6,000 per premises? That's 150 grand of free money to them, to the bottom line. They don't have to work.
That's
for
not
that.
much.
No, but hang on. That's
really.
that's one site for a year's profit. One escape room. So when you think of it, will they be? What I'm saying is straight to the bottom line, Steve. Right? No cost to that. No cost of sales. Nothing. That's a straight to the bottom line. That cash. Right? I don't think they'll take a massive hit at all, a big hit from this any downturn. And like you said, there's limited numbers in escape rooms anyway. Boom battle bars for young people who don't really care about Omicron. So it's like So
also the other thing, just to jump in on that, is that on Steve's point, is that it's about diversity in your portfolio. And like if you had a portfolio,
diversity in my portfolio, I love diversity. I'd invest in those guys. I loved their dancing.
Exactly, got to have some dancers in your portfolio. No, if you had a portfolio just full of leisure stocks, then you're a bit like, really overexposed into that area, that sector, that area. Whereas, you've pretty much, I think, knowing your portfolio, you've only got Escape Hunt or XPF as they are now, in that kind of sector. So, they may have a rocky road because of Omicron or the next variant or whatever, but you've got other stocks in that portfolio that won't be anywhere near as affected by COVID, and so your portfolio value should go up. So it's about having a blended approach, isn't it?
Yeah, exactly. And do you know what? Like Pad said there, though, the hit has been taken. The share price has grinded low. It's below placing price. There's very many clever investor who invested a big chunk of money into XPF, Escape Hunt, XP Factory at 30 pence. You can buy below that now. You can buy below the clever investor who get preferential treatment. And they get the placing price at discount, so that's priced in.
I did both, so there you go.
There we are.
But just go back on Steve's portfolio, like you were saying about Polarian being responsible for some of that hit. But Polarian's only about 10% lower now than it was this time last year. Yeah. And assuming it's not 100% of your portfolio, that's only an account for a little bit of that 15% loss that you're.
Well, as you know, on the bounce, I did reduce on Polarian because...
No, about Steve's portfolio.
Yeah, Steve,
He was kind of blaming his 15% loss on Polarian. I don't think that would...
Well, no, it's part of that. It's
more like it's the dog.
SO4 as well, that was another one.
That's another
I think it's like chipped away at just a couple of stocks and they all kind of brought me down.
Now we know, Steve, right? Listen, Polarian, right, didn't really fit the strategy a little bit because, it was always a whole pipe potential stock, but who's doing the hit? Stop doing your hair.
That's Paddy.
Sorry, that's me.
What is that, Pad?
That's Natalie.
Oh, Natalie's doing her hair. Oh, Natalie. Paddy's revealed the name. Who is Natalie? Natalie.
Let's hope she's doing her hair.
Is he? What's his name? What's he doing?
Yeah. So yeah, in fact, look, talk about diversity. Yes, I've got a little thing in front of me here, a presentation there. So I've got 5 companies. I've now reduced Pallarium to the point where it isn't a significant part of my portfolio. Why? I don't think potential is any less. I think it's greater as COVID goes on, lung problems go on. It's still massive potential there. But you've always got to learn. There's always a learning curve, and I think I'm not now going to put a big chunk of my portfolio into a company that relies on FDA approval to achieve their commercial success. Because the FDA is a black box. You don't know what's going on in there. I have no idea, and regardless of what probability you give to the chance of success, I'm happy to stay out until the FDA give the next... If they say it's passed, it'll fly. The share price will fly. I'm happy to miss out on that initial fly, and I'll probably, jump in on a dip somewhere. But I'm not going to take the chance that the FDA knocking them back again, because that hit my portfolio massively, and that's a known risk. It's a risk you can avoid. So if you know about it, why put up with it? And in fact, last time, looking back in now, we were absolutely insane when I started buying Pallarium at 17 pence to have not top sliced some before that decision when it was like 90 pence a quid. So so even though I'm still up on sort of Pallarium, it's still a risk I should have avoided. I should have taken some off the table. And so that is it's still a high potential stock, Pallarium. Until it starts generating revenue, it is. And anything like that is, But looking at diversity, like you say, so in XP Factory, that's I think that's a kind of hot area, because it's not just leisure. It's a bit different now. It's moving towards experiential leisure, competitive socialising, which is a hot area for people. But that is it's priced in.
That is still leisure. That's all leisure.
Oh, it's leisure, yes, but it's not just.
Oh, it's leisure. It's leisure.
Yeah, it's leisure, but it's experiential leisure and all that.
Axe throwing. That's leisurely.
Yeah, it's a fast-growing area of leisure. You know what I'm saying, and they're rolling out things. But what I'm saying is, it's like it's priced in. The worry is priced in there, absolutely priced in. So if you want a recovery stock, that's a good play, a really good play. Because you've got to ask yourself this question: of the stocks you own, which one do you think will not improve this year? Because I think all my stocks will do better this year. Absolutely, the businesses themselves will do better. So going around the thing, Biome Technologies, that's done 2 profit warnings because of supply chain issues. And now they've got the RF technology side, announcing new contracts. I didn't see this happening. Now, going back to 2018, Biome Technologies, the RF side, did 7 million in revenue alone without the bioplastics. And then it's very cyclical, that market. So the following year did 4 million and then sort of grind to a halt pretty much, or did 1 million, I think, in 2020, but also you had COVID. But now they've already done 1 million in 2022 contracts in that side of the business. That's not including the area of the business I invested in was the biodegradable plastics. So if there's 2 parts of their business starts growing this year, I think they'll exceed expectations. I mean, supply chains are maybe still a little bit of an issue, but will that improve this year, next year, and the year after? Yes, absolutely. This big issue they got supply chains. That's not a problem. It's going to get less of a problem. So Biome, I like. XP Factory, Gfinity, I don't understand. They're improving all the time. They will not get hit really from any lockdowns. Not lockdowns are not going to happen, but they're online, so it's they're going to grow. One of the most frustrating shares I've ever held, Gfinity. Absolutely so frustrating, isn't it? It goes up, some traders sell it down. I don't know what's going on there, and I think it may be when they acquire websites, they give an option. They don't buy them in cash. Sometimes a little bit of cash, but a lot of shares. I think it may be the owners of those websites selling their stock just to realise some profits, which is fine. If you run a business for years and years and it's bought up, you want to realise some profit on it. So it may be that dragging it back. But sooner or later, the fundamentals of Gfinity will encourage buying pressure, and that buying pressure will overcome the selling pressure, because it's so annoying. But the longer it goes on for, the more compelling investment it becomes, because it's like their fundamentals are improving, but the share price isn't rising. So I'm thinking, okay, it's getting cheaper essentially, but it's frustrating. Trufin as well, doing very well. Lloyd's, listen, when I spoke to James last time, Trufin, he was confident. I said the deal with Lloyd's will get done, but he didn't sound as confident that it would get done by 10th of December. Now he seems a lot more confident it will get done. He's on the timescale in the early 2022. But also he mentioned there's significant other contracts happening for Satago outside of Lloyd's, which will also be game changing. The growth on that is very good. The growth estimates is like, let me just look down. I've got so expected to do 30 13.3 million in revenue this year. In 2021, that's just gone. 2022, 20 million. So what's that? 7 million. That's a 50% gain, pretty much. And after that, 35 million in 2023. That's without the other deals outside Lloyd's. So, I mean, it could be a lot higher than that. And again, that's not going to be affected too much. It's fintech and gaming. How is that going to be affected by real world sort of footfall? It's not. Now there's GFin. What else is there? GTech. Oh, I think it's going to be a biggie. They announced, didn't they?
Yeah.
I don't know if you saw that. I haven't covered it on video. They announced a second deal with SGN, which is the gas network provider, to progress 3 further UK sites. And they've added more to their review list, which now numbers 21. 21 sites they're looking at. Now, even if you look at, regardless of their existing business, which is software, analytics, about energy and geospatial awareness, that's doing about 4 million a year in revenue. Now, these hubs, each one of these hubs, hydrogen hubs, they get 20% equity in that, ownership of each site. Each one, their broker said, is going to be worth a minimum of 4.7 million in revenue, 1.8 in EBITDA. So you put that 1.8 on the EBITDA, you talk about 18 million per site. That's what it's worth pretty much in EV. So already on 2 sites, you can see 35 million on these hydrogen sites alone, and that's 136% higher than where we are at the moment. So that's on 2 sites. Now you get 20 sites. That's phenomenal. I don't even want to say how big that could be. We're in hydrogen. Have you monitored green hydrogen? It's so hot. Every big company and country in the world are adopting it. It's the only true way of getting down to carbon zero with energy, pretty much. But you're talking about 20 sites, you're talking about an increase of over 2,000%. And they've got cash as well. And there's a capital-light model. They supply their expertise, their software, their analytics and all that stuff, and they get 20% of each project. It doesn't cost them anything apart from time and their expertise, so that's a perfect little model there in a very, very hot area. And I think as time goes on in this decade, you'll see more countries, companies adopting green hydrogen as a way forward. Anything else there?
G-Tech.
I mentioned G-Tech.
I'm joking.
Yeah, just.
What about Gfinity?
yeah. But do you know also they're mega trends, right? All those are mega trends, I believe. Trufin, fintech, biome, biodegradable plastics, bio-based, experiential leisure. It was a good rebound. They're going to be happening. Gfinity, of course, growing. And
I'm still very much hopeful for Polarian, and I'm still pretty.
I think you'll do well. I'll answer a question someone sent to me on Twitter, right? Or was it on? Let's have a look. This is what I said. I still hold Polarian. Someone asked me about it. I said, however, I did reduce my holding after it bounced following the drop. The lesson I learned was to avoid binary plays where a company's commercial success will depend on the decision of a regulatory body. So I will not commit any more capital until they've achieved FDA approval. It's a bit too risky. It's a safer plays out there. Of course, this is not to say it won't jump on any other positive news beforehand. I think it's a strong possibility anything they release RNS-wise will see the share price rise. Because I don't think it's going to be negative. But the most negative thing, like I said before, the most negative bit of news they've released, which is like we expected, 90% probability of them getting FDA approval. They didn't get it. So wow. So that was really left field. So now, even if they say we've had a meeting with the guys from the FDA, that would see the share price go up. Even if they say nothing else, Or we've sent a letter to the FDA, they've acknowledged the letter. Letter received, stamp. Even if they say that, I think the share price will go up because we've had nothing from. All this now is sitting there, it's just going sideways on nothing,
Yeah. I'm still up over sort of 10% of my portfolio on that, and like I say, I'm still hopeful. I think just got to patience, hopefully. And
no, but do you see what I'm not saying? It's a different thing here. Different thing between share price rising.
Yeah.
And the reason why I've reduced. Now, I'm not saying the share price won't rise. I'm happy to not have a big chunk of it when the share price rises. What I'm saying is I just want to avoid that binary play again. And that's, if you don't learn from the lessons, then you're not going to improve, are you? So in my mind, I don't want to be majorly exposed to it when they come around again to that FDA approval time. Then maybe, I may have dipped out a little too early. I think it could go up higher before. But I thought, no, why there's massive liquidity, that bounce that happened, I reduced a bit. So that's why I thought there. And then
it's fascinating, isn't it? Because when that does come round again, wherever the share price is, then the sensible thing will be at that point to take a bit off the table because you don't know which way it'll go. But then equally, there's the devil on your shoulders kind of going, but surely this is second time it's going to go through now, isn't it? Don't reduce your holding now, because you'll be really regretting that when it spikes.
I think there's obviously probably a bigger chance of them getting FDA approval now. All they have to do is address the issues the FDA have with them. So if they address those issues, what's to stop them getting away? I just don't trust the FDA,
No, yeah.
Big
But anyway,
pharma.
let's see how that pans out during the year.
Yeah, and but that's the way things happen. That's plenty, isn't it? As Paddy says.
Oh yeah, that's enough.
Paddy's gone.
Absolutely plenty.
Have you one other thing? Anything worth looking at? I'm loving the John Grisham books. Phenomenal. The guy's mind. I don't see how he writes that. The level of detail in those books, and he churns them out regularly. But I'm asking my TV. I'm on one of the Jake Briggins, one of the. A lawyer in there, very good. It's a series of 3 books within his. He does standalone books, but he does series as well, based around characters. And I'm just finishing the 3rd of that Jake Briggins thing. But it's very good. He's trying to defend a young kid who kills. It's not a stepfather, but it's very good. That's my book recommendations is John Grisham. I got through those. But TV wise, I laughed my head off last night. We just caught. I don't know why we dropped out with Succession. I don't know why we stopped watching it. I realised me and Megan were looking to watch Succession. And we thought we'd ended the series. We hadn't. We put it on, and the one I watched was where Roman had sent a dick pic to his father in the boardroom.
That is hilarious.
And I just couldn't stop laughing. Just, his father looked at it, he said, okay, get the bankers in. Brian Cox. And they got them all on the table, and he got a text message, and Brian Cox had looked at it. And Roman just realised that time he'd sent the text message to the wrong person. And he was meant to send it to Jerry, and he sent it to his father. And it just, the silent reactions of Brian Cox and Roman, just so good. The acting was so brilliant.
That happened at a place I worked. That actually happened.
Did it?
Somebody was going through their phone showing people a location they wanted to film something, and they just went a bit too far and showed the whole room a picture of their junk.
I love that split second after that when you can see their mind is racing to try and find a reason why that should be on there. I don't know. That's not. Someone sent me that. I didn't. It's not mine. So you could.
But the problem was he was ginger, and so was the photo. So
perfect. It's like a fingerprint. You couldn't, mate. You can't deny that. It's like I know, but it's no way you can get out of that. Doesn't matter what you say. You may as well jump out the window. You can't get out of it. It doesn't matter what you say, and even showing your own junk. See, that is mine. Yep, proud of it. Anyway, but another thing I watched on the treadmill, which I'd recommend for the wrong reasons. It's awful, wonderful, right? I don't know if you saw this. You may have seen it. It's Inside Dubai. Have you seen this on BBC iPlayer? It's literally show-offs, fakery, Instagram wannabes, just a waste of money. Rich people in Dubai, British people. It's on BBC iPlayer. Have a watch of it. You got idiots there, like young kids, wrapping their Lambos and all that. It's not, expats pretty much. It is amazing, but it's all money and it's all show, and you think there's more to life than that, isn't there? But fair play, there's some success stories there, but it's worth watching. And do you know what's nice to watch, though? When you're in winter climes, like we are at the moment, and dark and dreary, just nice to watch TV with sun and blue skies, It just gives you a little bit of a lift, I think. Maybe.
Okay.
That's why
I'd recommend Stay Close on Netflix.
What's that about?
Oh, yeah.
Oh, really?
Yeah.
Have you watched the whole thing yet?
Yeah.
Okay.
Oh, what about that one that I reckon we had a big argument on the WhatsApp about that Leonardo DiCaprio and
Don't
Jennifer.
Look Up.
Don't Look Up, yeah.
Oh, yeah.
I started watching this. This is dreadful. I don't know what's going on here. This is awful. And then I really got into it. I thought, this is quite good, actually. Because it's about the whole, how complex social media is and politics entwined, and you don't know what the truth is really anymore. And so the Earth is in this meteor. Even the idea is old, but I'm sure that they're using the meteor just basically trying a bit of truth, and they're trying to explain that the Earth could explode, and no one's. the politicians are spinning it for their gain. Social media just saying it's not true and all this stuff. It's like hard to get your message through, the actual message you want to get through, and it's quite good. But it is a bit. It's a parody, isn't it? It's satire, and so some people Paddy didn't like it.
I think it has to have some element of believability for it to work. Unfortunately, that is a black and white thing. There's no ability to twist that. If that's happening, it's happening. If it's not, it's not. Like COVID and green and the environment, it's very easy to pick your side and to twist what you're hearing and hear what you want to hear.
What I liked about it wasn't just about the media thing. Like I said to you, it could have been about COVID, it could have been about anything, climate change. There's a truth. But the truth is not obvious. But then there's people spin it. You get conspiracy theories, and now, like I said, with social media, extremism works. So you get one. It's either one side saying absolute rubbish, the other side is absolute truth. There's no middle people saying, or if there are, they're lost in the noise. The actual truth in the middle, that's lost. And you get politicians spin it themselves, and and I just think it's a bit of that. So I quite like that. I thought it's nuts. Even if we had a meteor coming towards us, which is an old story, I thought anyway, because that's been done before. And I thought even the stories are old. But even if you had that happening, when would we actually know the truth? It's like because some people say because you wouldn't know. I watched that QAnon thing.
Well, every time that's happened, that's been front page news. Every time there's been one, that's a very attractive story to a newspaper editor. They wouldn't ignore that. Everyone would be on top of that straight away.
Yeah.
And it's not like COVID hasn't had any newspaper headlines. Like people want to talk about the end of the world. Like it's an attractive story.
It's almost like the opposite, isn't it? I think in this day and age, if something like that, they would over-accentuate it.
Yeah, exactly. They'll go crazy.
Yeah. No, but meteors, I know, but I'm saying it's a good example of COVID as well, where we don't really know the truth, I've seen things recently, in fact, Dominic Cummings sort of retweeted about, I think, Moderna's new vaccine. I didn't realise this, and there's doctors retweeting this, and there's been doctors blocked now on Twitter and all this stuff. About if you say anything wrong about the vaccines, you get in trouble on social media because almost the algorithms block you, and take you down. But they're saying that I don't know if it's Moderna, I don't know, I shouldn't say it, which one of the big American pharma companies, their new vaccine or antiviral, some doctors are saying that encourages mutations of COVID. And there's doctors backing this up, saying it should not be passed. And they say it'll make it worse. It'll make more mutations. And there's a lot of people backing this up, but yet a lot of people are being blocked for saying it because they're saying you're an anti-vaxxer. No, it's not that. So what I'm saying is the truth isn't as plain because you've got these pharma companies and there's other people saying, did you realise that people who die with COVID in hospitals get some kind of compensation? The hospital gets some kind of compensation in some way. I don't know why that is. And so when you see someone dying, if someone died in a car crash, right, and you went to their funeral, but they got tested before they went into hospital and they had COVID, at the funeral you wouldn't get people saying, and John, died with COVID.
These are all things which are just made up, aren't they?
No, but incidentals are not. True. Incidentals are not though. Incidental COVID is not. There's
that's fine, but hospitals don't get paid extra depending on what you die on. That is literally one of these things
exactly.
that spreads around the internet, and everyone, your taxi driver will believe that and will swear on his deathbed that that's the truth. But actually, it's not actually true. And the minute you remove that, suddenly the whole argument disappears.
Yeah, but listen, when you say you can then back it up with look at incidentals then, because that's the problem. Now we got case numbers.
But that's an issue with the way media's reported this right from the very start. They've taken those case numbers as read right from the very beginning, and no one has ever given it any context. And those numbers weren't ever intended to be just consumed by the public.
No, I know, but that's it. But media is about extreme.
Trying to be helpful and trying to display everything they had. Then the journalists haven't asked enough questions. The public have looked at that number and just believed it straight away. And it was never intended for that. And the 28, the having COVID within 28 days is like, it's a really tough metric, but like, I'm not sure what else they should have done to track the number of people dying with COVID, because the alternative is you say that someone who dies in hospital who had COVID didn't have COVID at all, but that number needs to be logged somewhere.
Well, no, now they're doing it, aren't they? Now they're doing it. They are now splitting. Because if you look at the graph, like if you go to healthcare on the government website, this is a virus that we've had more data on than any other virus. It's like if we had this data on cold or flus,
logging it as well.
Exactly. But the trouble is, it's a typical example of the public, the masses having too much data, too much information. Because we are focused on the cases, and yet people, you can't see the subtlety of it, which is not the nuances that you need to look at. Like if you look at the chart of
patients admitted to hospital. First of all, you look at cases. That's the big figure they all talk about. Cases are going through the roof. They're going nuts. Absolutely nuts. They're way above anywhere we've seen before. Then you look at patients admitted to the hospital. Even that chart now is starting to look a bit scary because you've got the peak in April 2020 went to 3,000. Then it went to January 2021, went to over 4,000. Now we're at 2,500. So it's getting up towards that April peak. But if you scroll down, a lot of those are incidentals. That means people go into hospital with something else. They get tested for COVID. They happen to have COVID. They're not ill with COVID, but they're logged, and that's why it's gone up. Of course, you're going to have a massive amount of figures because it's very transmissible, but they're not ill from that. Then if you scroll down to, for example, patients in mechanical ventilator beds, there's no spike whatsoever. If you go down to deaths, there's no spike whatsoever. So it's like everyone's focusing on the big...
The BBC this week finally did an article with all of this context, but they should have been doing that right from the start. And somebody, when they sit in that studio in News at 10 and to give out these numbers, there should be someone saying, but this is the wider story, or this is what that number's really telling us. Just continually reporting cases every day is not helpful.
Exactly, and it doesn't help. And also, it doesn't help. It almost backs up conspiracy theories, but because there's too much stuff out there. And if you look at a quick on to BBC, there's a quick video on QAnon. The year since the Capitol riots happened in America, and that guy with the horns and all that stuff, the shaman guy, he's in prison now, and he has got a mental disorder from the army, and they didn't tell him about it. Apparently but he doesn't understand that. But he went to the judge. Apparently, he was very sorry and all that stuff. A little video it's worth doing. And she talks, and this reporter tries to talk to some QAnon people, and she gets on Telegram and all this stuff, and she gets talks into people, and she asks them to meet them. They turn her down, and she doesn't meet with this one woman. And you're thinking, and she's a dog groomer, and she starts talking about satanic, cabals, elite people. You're thinking, are you absolutely insane? I wouldn't even trust you to groom my dog, But there are people out there like that. And this guy now...
Where's that?
I'll send you a link. There's a little 5-minute video article about this lady, Irish reporter from the BBC, goes to America, tries to talk to some QAnon people. And you're thinking, how do these people exist and function normally with that kind of thoughts in their head? I'm just thinking they must have some kind of mental issue that they've not been addressing, And even that guy, Shaman, who apologised in court and said he was wrong and all that stuff, apparently he sacked his lawyer now after he was put 4 years in prison, and now he's doing interviews from prison to right-wing media, still talking about, these kind of conspiracies. So it's very odd how it can be so extreme, and thinking, how can you base that in any sort of reasonable sort of logic or thought? It doesn't make any sense. But anyway, so that's why I quite like that film anyway.
Are we still recording the podcast?
Yeah, I think so.
Feels like
it was plenty 10 minutes ago. Now I don't know what it is, but
no, it's really plenty. We're over plenty.
Right,
over plenty.
Cheers, guys.
Good to see you, lads.
Adios.
Bye.
Bye. Speak next week. Bye.
I think you've overserved.
We have overserved.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.